Our next speaker is Hayden Bartrop, CFO and Company Secretary of Lunnon Metals.
Thank you very much, Hilary. Great to be here. I'm here to talk about the Lunnon story. So who are we? Well, we're an explorer developer located on the prolific Campbell Belt. So in terms of the Campbell Belt, I'm sure you all know it, but I'll just give you what makes it so prolific and so great. So 1.6 million tonnes of contained nickel mined over roughly 57 years and still being mined today courtesy of Wyloo with Long and Durkin. But what makes it great? It's high grade. So we've seen a number of people present today. Typically Campbell grades are sitting around the 3%, but can be higher. It's got great quality concentrate. So we see low deleterious materials such as arsenic, which is really becoming critical now for batteries, which have very low tolerances for things like arsenic. It also has high iron to MgO ratios, which is something which is very much desired by the smelters who process the nickel sulfides. So Lunnon is the only company at present who you can get exposure to on the Campbell belt. So we're very fortunate. We've got our friends here who AJ will shortly talk about Lanfranchi to the south, but not listed. So it's really only us. In terms of our land packages, we've got two land packages. We've got Foster and Baker to the south, and we've got Fisher and Silver Lake to the north. And as you can see, it's just below the Campbell concentrator in orange there. So right now we have mineral resource of 87,000 tonnes of contained nickel at roughly 3.1% grade. We also have an ore reserve at our Baker property at 17,500 tonnes of contained nickel at 2.86% metal. So one final point is we do hear a fair bit the arsenic. So Campbell has never really had any issues with arsenic, which is a bit distinct from our friends a bit further south and to the west of us at Widgiemooltha. One of the things I think you're all probably familiar with is that there's been a considerable amount of consolidation in the nickel sector in the last year or so. We've seen the Oz Minerals acquisition by BHP. Importantly there, the West Musgrave project has been acquired. We've seen IGO recently acquire Western Areas, and we've seen Wyloo acquire Mincor. And that's really left a void on the ASX nickel play space. So if we look at our two major peers, we've got Nickel Industry, who are located in Indonesia, and we've got Centaurus, who you heard earlier today, are located in Brazil. But there's no one except us, in terms of market cap then, who is actually based in Australia. So we think we operate, or we're the next go-to, if I can call it that, Australian nickel play on the ASX. And we would really like to see us fill that void that has been left by Western Areas and Mincor and jump into that space there. So what do I think, what are the key factors that I think distinguish us from some of the others? As I mentioned, we're already in the premium location of Campbell. We've got high-grade nickel sulfides. We've heard a lot of people talk today about the benefits of nickel sulfides compared to laterite, obviously the processing, and with that comes some other benefits like carbon emissions. However, we also see they're actually quite rare and hard to find. So some of the smelters are very much competing for nickel sulfides. So terms are becoming better for nickel sulfide concentrate. For us, we're currently uncontracted in terms of our nickel supply. So we see that gives us a whole lot of optionality. So whether that is someone who would like to take our ore and use it for downstream processing, or it enables us to see how the market evolves in the next year or so as the battery space has evolved. So I've talked, and you probably heard today, there's the geopolitical issues. So we're seeing potential premiums for Western-based suppliers of nickel. In particular, you've seen the Inflation Reduction Act around that. We see then the social issues. So we heard earlier, we've got rainforest destruction, we've got carbon emissions, and then finally we've got the quality, which I've talked about. So such things as arsenic, which is incredibly important going into batteries. We've got a strong balance sheet, which I think we can go forward and we can execute on our exploration program we've got there. We can continue to grow our ore reserves and mineral resources. And we can also make additional discoveries. So that really sets us up. So now what I want to talk to is actually the property we've got. But first of all, this is probably one of my favourite slides, well put together by Ed, and he presents it very well, so hopefully I can do it justice. But when the company was effectively established, we've got 4 historical nickel mines. We've got Silver Lake, Fisher, Jan and Foster. Now these mines all produced 253,000 tonnes of contained nickel up until when they shut, which is roughly in the, some of them in the early 90s. They were then sold with the gold to Goldfields, and there they lay dormant pretty much, and no work has ever really happened on these, apart from gold exploration, until they were put into the Lunnon metal vehicle. So we see a whole lot of upside that we think we can realise, and if we look to the examples of our peers, so Panoramic, IGO and Mincor, when Western Mining sold those assets to them, you can see in the smaller dots, so for example Panoramic, 101,000 contained nickel was produced up until the time they were sold by WMC. Now since that period, they've been able to grow. So again, in Panoramic's example, they've produced 196,000 tonnes of contained nickel. So overall, we've seen effectively 440,000 tonnes of contained nickel produced after WMC sold these. So that's the upside that we think we can potentially realise. And I suppose the question is well, why did WMC sell these? Well, they did know that there was upside to them, and they managed to lock in these producers to roughly 20-year offtake agreements. But we've had a couple of things. We've had the advent of effectively downhole electromagnetic surveys, and we've had the advent of other things like paste fill, which makes it easy to mine, particularly some of these remnant resources. So these are some of the things that we'll look to utilise and use when we come into eventual production. However, what I find interesting is while we talk about these 4 mines, one of the key things that's really been happening with the company since it listed in June 21 is the discovery of Baker. So while we're waiting to get into Foster, we're looking at dewatering, we're waiting for approvals. We had a couple of exploration programs, and pretty much on our first program, we discovered Baker. So let me just talk a little bit about Baker. So we produced a pre-feasibility study in May this year. So Baker is, despite it being relatively modest in size, it really punches above its weight. So at 612,000 ounces, 2.86% contained grade nickel, results in a contained 17,500 contained nickel, which produces a free cash flow of $196 million, which is greater than the market cap to date. Now, taking into account the nickel price has come back since then, we still see that Baker really underwrites the value of the company. So why does it generate such good cash flow? Well, the grade, one, but its proximity to surface is another, 70 metres below surface, vertical. Now, the PFS really only extends down to 200 metres below surface. We've then got another 200 metres of inferred, and it's open below that. However, the PFS is really just focused on the 70 to 200 metres. And within that, we generate that massive free cash flow for the size. But the final thing that really drives the free cash flow value is the pre-production capex at 18.6 million. So we've got infrastructure in place. As we said, it's a short distance from surface, and we can access it off the West Idaho gold pit. So roughly 450 metres, we have to do a decline and we get to the top of the ore body, and then we can start mining. The thesis of the pre-feasibility study is that we'd eventually process this at BHP, but we're still considering all options there. The final advantage that we see in terms of Baker, apart from the down plunge extent that we'll continue to look at, and we'll probably drill that out once we get into operation, is that we've also discovered East Trough. So this was discovered roughly about the same time as Baker, but the focus was on Baker, and we've only now got back to East Trough. So that's not in the PFS, and that's something that we'll look at, and we're working up on a mineral resource there now. But that's only 450 metres to the west, so something that could be easily accessible from Baker underground. I'll now just talk about our Foster project. So our Foster project is only 3 kilometres from Baker as the crow flies. It was the first one in mineral resource for the company at roughly 57,000 contained nickel tonnes. It's broadly broken down into 3 areas. We've got the Warren, we've got our Foster Central, which is 85H, and the 16C surfaces and N14C surfaces, and then we've got Foster South further down. So we're currently working on a pre-feasibility study which combines both Baker and Foster into one, and we were looking to leverage effectively the scale of the two to ultimately provide a better product and a longer life operation. So we're currently de-risking that, and we hope to be able to release the results in early next year. I'll now move to our northern area project, which is our Fisher and Silver Lake projects, both of which currently don't have any mineral resources. However, we only recently acquired these from Goldfields just over a year ago, and we haven't done too much work on them as yet. So currently, if we just have a comparison of the northern area, which has been continuously mined for 50 years and is now continually being mined by Wyloo, as I mentioned, at Dirk and Long Shafts. But we look to the south, where Fisher and Silver Lake have effectively been shut for over 35 years. We've got the northern area that's produced 815,000 tonnes of contained nickel and the southern area of 230,000 tonnes of contained nickel. So we see a whole lot of upside there. So we'll continue our work on Fisher and Silver Lake, and one of the key things that we've got there is a historical core program. We've got 560 kilometres of WMC core which we can cut, re-assay, and then we can look at producing effectively mineral resources on the back of those results following further verification. But one of the key areas that we do like in that northern area is the Long South Gap. So we postulate that the Victor and the Long channels continue. Now, if we think about Campbelda, one of the key advantages is that these have a long plunge extent, up to 4, 5, 6 kilometres in terms of extent there. So we postulate that these extend onto our tenure, which we term the Long South Gap, and this is an area that has seen absolutely no drilling whatsoever, whether it's WMC or others. So this is an area that we're currently working on. One of the things that we've just recently done is a 2D seismic, which I'll just show you here. And on that 2D seismic, one of the things that we had asked them to do is project, what do you think a channel would look like if you found it, which would host the nickel? And they came back with a target, and interestingly enough, it projects along where we thought the Victor channel would come along. So based on that, and based on some work that Wyloo had also done as part of their takeover statement, they had also postulated that these channels had continued, but they probably have been uplifted, and so that's something that a bit closer to surface makes it a bit more interesting for us. So on the back of that, we've decided to drill the target, not wait until we've completed a 3D seismic, and we're currently drilling there right now. So what do we hope? Well, we'd love to be able to hit this on the head, but we know the odds are probably against us. So the first hole will really help us understand the stratigraphy. We'll be able to use it to help to provide data and input into the 3D seismic survey that we have done. We'll obviously, with the first hole, go down with downhole EM, see if we can see anything, and if we do, we'll wedge off that. Otherwise, we'll wait for the 3D targets, replan, and come back and drill based on those targets. So we see ourselves being in this area for probably 12 to 18 months at the very least. But yeah, results coming, hopefully. In terms of ourselves, I've already mentioned our cash, 32.5 million. That follows an 18 million placement just done in August. We've got a strong team, a team that has worked in Campbelda for some time. So Ed, Max was underground at Foster for some time. Ian Junk has worked at Panoramic back in the day, working on the Lanfranchi there. So we think we've got the team to be able to execute. So just finally, in closing off, we think Campbelda, a world-class belt, still has plenty of potential to give. It's a globally significant camp. It's got excellent location and services, unrivaled record of discovery, and we think it provides a genuine opportunity for battery suppliers and others to downstream, to diversify their supply chain. So investing in Australia as opposed to Indonesia, which we're getting close to 50% of all nickel produced coming from Indonesia. I think we've got the right assets, right location, 4 historical mines, 1 discovery. As I said, I think we're underexplored, hasn't seen any nickel mineralisation since, or before the last boom. We've got the historical core program I mentioned, and we've got the infrastructure around that. And I think it's the right time now for batteries as we see the demand for that ever increase. So thank you very much.